Welcome back to another episode of Matters of the Heart and Soul podcast. This is your host, Russell Bruce, and today we have another special guest and a good friend of mine, Mr. Vaughn Showell. Vaughn, welcome to the show.
Well, thank you for having me there, Mr. Russell Bruce.
All right, definitely. So Vaughn Showell is a seasoned financial service executive, veteran trusted business strategist, bringing over 25 years of experience across mortgage banking and advanced financial planning services. A proud retired U.S. Army Special Agent in Counterintelligence, Vaughn blends discipline, leadership with real-world insight, fostering trust and credibility in his financial advisory roles. Also, Vaughn, once again, I said, is a good friend of mine. Vaughn and I met about 25 years ago in Rio de Janeiro in Brazil. And we started talking, hit it off, and found out we actually lived around a corner from each other. And we've been the best of friends ever since. And glad to have him here on the show. I think you guys are going to enjoy listening to what he has to say. He's offering a wealth of information. We actually worked together once before when he was a VP in mortgages when I was a real estate investor and I got into mortgages. So once again, welcome to the show. Vaughn, tell the people a little bit more about yourself and your background.
Well, great, Rose. So thank you for that introduction, a very humble introduction. I appreciate that. That pretty much does sum up, I guess, the introduction, I guess you can say, to my career and my being. Started off originally from New York City, born and raised, born in Queens, raised in the Bronx. Moved around the country quite a bit. Parents were divorced, so moved from New York to California, from California to Tuskegee, Alabama. My freshman year of high school, from Tuskegee, Alabama, back to New York. Tuskegee was too slow for me in the 9th grade. Oh my goodness! So moved back to New York for my sophomore and junior year of high school, and then my senior year, I moved to North Carolina, where that travel to North Carolina, that was a whole experience in itself. The reason for that move from New York to Carolina has given me the title that I want to write a book on this one day, is that I consider myself the first failed transfer in this day and age of moving in sports from high schools and colleges. So I left New York after my junior year of basketball playing varsity, and didn't like my environment where I was, and I was a little hothead thinking I'd have a better chance of getting a scholarship playing in the South where my mother was in North Carolina. And I took it upon myself to relocate, unbeknownst to my dad, who was very upset with me when I left New York. I stayed in North Carolina. I'm like, this high school, not that good. They had like a 9-16 record the year before. And, I'm down and from New York. I got some game. And the guys from the team, I bonded with them throughout the summer and enrolled into school. And the head basketball coach was my trigonometry teacher, my second period teacher. Well, come tryouts, I killed him in tryouts, did my thing in tryouts. But it came down to go look at your name on the wall. And back in the day, we made the team to put your name on the wall in the gym, right? And I'm in the second period class, and guys coming from the gym for first period saying, Vaughn, you got cut. I said, man, wow. Stop playing. I said, man, stop playing. And by the time the third guy said, I said, you know what, let me go down to the gym and just see. I'm going to second period right now where Coach Healy is. Coach Heller was his name. I go into the gym, Russell. I look on the list. There's no Vaughn Showell on that list.
Wow.
He was a senior, got cut. I'm like, I go to class. I'm sitting down in trigonometry. Now, mind you, I don't hear words going on. I am so hot right about now. And Coach Heller, he's about maybe 70 years old, a Caucasian guy there in Salisbury, North Carolina. And after class, I said, Coach, what happened? What's going on? Why'd you cut me? He said, Vaughn, he said, you're a good player. You're a very good player. He said, "But I just can't have a senior sit in the bench." That's what he told me.
Wow.
He can't have a senior sit in the bench, and I didn't understand at the time. I'm like, "What do you mean?" He's like, he probably said some other things, but when he said that, I just zoned out. So make a long story short, went through class, called my mom. I said, you need to come get me. I was devastated. My whole reason for staying there was to play ball, go to college, get a scholarship, maybe my goal was for the Olympic team. This was in 85, so the Olympics were in 88. I'm like, I can do this, right? So that rocked my world, and that really transformed me into being responsible for my actions and being a young man and wanting to do better for myself. And from there, I graduated high school at age 17 and joined the military. But that experience in high school by being cut, my buddy who was the quarterback of the football team, he played on the basketball team too. That's what tryouts during football season. A lot of football players are on the team, but they're not trying out. So my man was like, Vaughn, said, look, go play in this church league. Take my spot in this church league over here, and show them what you can do. Sure enough, I went to the church league there in Salisbury. We won 15-0, averaged like 30 points a game. Took the championship, and it's a small city. Salisbury was small, but everybody knew who I was. They knew I was down from New York because people come up top that there's a lot of talk in the streets, right? So
Right.
when the season came and went, I let them know that look, they cut the wrong one, and that really spearheaded my aggression and my drive to prove myself and everything that I did. So I did join the military after high school, after I was accepted to UNC Charlotte, and didn't have a great relationship with my stepdad, and he's going to help me through college. And I didn't really want to do it on his terms. So I'm paying for college on my own terms. And when I graduated high school at 17, my mother had to sign me into the military because back then, if you're under 18, you're underage. But my mother had to sign me in, so I had to go. I had to get out of Salisbury, and that's the best thing she could have done. Sign me in the military, join the army, and start my career in the military from there. Spent 10 years there. Started off in a position that paid the most money. I joined the army as a food specialist. They gave me a $10,000 signing bonus to join. And at 17, $10,000 is a lot of freaking money.
At 17, it sure is.
Yeah, I'm like 10,000 out of all these choices I have. I said 10,000. I said okay. I said my stepdad, he's a chef too. I said when I get out in 3 years, I can do this. And got in, we would cook for like two and a half years. Then I had a son, right? And I realized, okay, I need to do something different long-term career-wise. So I re-enlisted, went back to the recruiting office. I said, I need to change my MOS, my job skill. I said, what are my options? They said, well, these are your options based on your scores. I said, I said, what's this right here? This is a $25,000 bonus. They said, that's a special agent. They said, but you don't score high enough for that. I said, what do you mean? So you have an ASVAB. You have like 10 different scores, right?
Right.
And my one score was like, let's say a 102. It need to be a 105. They said, well, you can retake the test and then, maybe see if you qualify. I said, I'm gonna focus this time because when you take those tests, you just run through them, right? So I retook the test, got to a 105, boom. Changed my MOS to a special agent in counterintelligence. So I got $25,000 signing bonus. They showed me the money. All about the money. That's how I started, So got the half up front after I finished training, and then had the career as a special agent in the Army, where I had a top secret security clearance with SCI access, worked in the SCIF, a sensitive compartment information facility. Did espionage investigation, sabotage, protected the country's secrets, and did personal security investigations. So everything's security, always, dot the I's and cross the T's, very thorough. And that arena, as you know, is a very challenging field, very challenging, especially, in my class, as a matter of fact, there were only 2 blacks in the class and as a special agent, me and my buddy Glenn Jones. And my buddy Glenn Jones, he just retired last year as a CW5, one of the highest ranks you can get in the Army. And he took it to the hill. I did 30-something years as a special agent.
Wow.
Yeah,
Big
yeah,
stuff, man.
yeah. So no, I stopped at 10 years after Desert Storm. My goal was to go FBI, CIA. However, I understood back in the 90s when the Cold War was just ending and a lot of agents were being compromised overseas. And, being, an agent was tough. And being a black agent, it's just like being in corporate America, being, a high up in corporate America is very challenging. So learning how to navigate the personalities of those who think I don't belong there. I started at a young age navigating, the personalities and being disappointed and overcoming challenges. So, I decided, after 10 years that I wanted to get out and do a civilian life and get a civilian wife. And that's what I did after 10 years. Traveled around the world between Korea, Germany, Iraq, Desert Storm veteran. I was in Seattle, I was in Washington, Tucson, Arizona, Maryland. Was my last assignment, DC area. And then I got out the military in Maryland and moved to Atlanta back in 1995, right before the Olympics. So, the foundation of my military background and my ability to overcome, strive, and prove myself has been started at a young age. And the discipline and the structure that I received as a special agent has poured over into my professional career. When I got out of the military, I got into the car business. As a matter of fact, I was on terminal leave and not knowing exactly what I was going to do. But like I said earlier, my goal was to go to FBI, CIA route. But when I moved to Atlanta, all the federal jobs were in DC, not here in Atlanta, so I had to find something else to do. So I said, well, I'll go GBI. This is before I got married. But once I got married, my wife was like, that's too dangerous. My mother was like, that's too dangerous. So I was going to start with Atlanta PD, then go GBI, which was the route. But they were like, no, that was just wasn't the play for them. So I thought, I found something else to do. That's how I got to sales. I was selling suits part time when I was in the military. I was paying child support. My son at the time was he was 6 or 7 years old. So I'm paying child support while I'm in the military. I'm working a full-time job in the military and I'm working part-time selling men's suits while I'm in the military. So ironically, Counterintelligence was the company I was selling suits for in Maryland, and they were based in Jonesboro here in Atlanta. So when it came to Atlanta, I started working for them part-time, or full-time rather. And after the third car salesman came to me and said, you need to be selling cars, you make more money, work less hours. So got trained, West Side Toyota out in Thornton Road. They trained me in selling. That's when I became a connoisseur of asking the tough questions and overcoming challenges and rejections. Learned how to sell cars. Became a top car salesman within about 2.5 years. And then my middle son was born. Anthony was born, and after working, 7 days a week, 12-hour days in the car business, and he was a month old. He was 2 months old. Boom! Before you knew it, so at that point, I said I gotta find something else to do. And my buddy of mine got into the mortgage business back in beginning of '98. He said, Vaughn, you work less hours and make more money. I said, well, I'm gonna do that. So sure enough, got into the mortgage business with Fidelity Bank, and back in end of '98, and haven't looked back since. Started in the mortgage industry from '98 to 2013, 14. I was able to navigate through the housing collapse of 2007, 2008, where I was a VP for ACE Mortgage Funding. And those times as a VP for the mortgage industry remind me of the times in the military when I was a special agent, navigating personalities and, doing what's right. But unfortunately, doing what's right isn't always the right thing to do. And I found myself with more challenges in the industry, and got divorced over that time. Became a single dad after the '08 housing collapse, and single dad to my 2 sons who were very active in sports all year round. So navigating that and continue to provide for them was very challenging. As you know, Russ, being a father as well. So, from 2008 to 2013, 2013 was really, really tough times, but God looked out for me year after year after year and held me down to navigate through different banks going into business. I moved from one bank to another. The mortgage division was still going into business left and right. So then I was at this one bank up in Johns Creek, and they knew I was a single father. Avery had a track meet, and it was like 2 o'clock. Right, 2 o'clock on a Friday. Like I got to go. So like, what do you mean you got to go? You got work to do. I said, no, my son had the track meet. He's like, well, give me a hard time about it. I said, I got you. I'll take care of it. But right then and there, I knew, you know what? Staying in corporate America was not the place. So I found another opportunity. A lot of financial firms were recruiting me. Charles Schwab, Edward Jones, and New York Life, a lot of companies. So I wasn't really motivated to go down that road, but New York Life, I'm familiar with them being from New York. So I said, let me talk to New York Life and see what they're about. And I had a conversation with a gentleman. Ironically, I knew him from years prior because his son played football with my son up in Kennesaw. And the recruiter set the interview. And I didn't recognize the name initially, but when I got to the interview, he came around the corner. His name was Dana. And Dana was like a female name at the time. So I'm thinking I knew with a female, but Dana came around the corner as a brother. I'm like, Dana? He's like, Vaughn? He was the managing partner at New York Life. So, wow. Yeah. So he's like, Vaughn. He said, come on in. I'm going to show you the ropes. I'll take care of you. And that's all she wrote. That's how I got into the financial services world as a financial advisor with New York Life. I learned the business for 2 years. And then became independent and started my own agency in Blue Cross Financial Services in 2017 after some New York Life in 2014. So that's how I got started into where I am today. The travels from the service to the mortgage industry, being a single father, and getting to this industry gave me purpose. And my purpose was to ensure that my sons, I went to college and went pro, that they be able to financially be stable. Because back then, even now, the stats are most kids or players who finish their pro career 4 to 5 years after their pro career, they go broke. So me getting into this industry was twofold. It gave me the flexibility to raise my boys. It gave me the income to raise my family. And it gave me a purpose to pour into my community and pour into our young men and our young women in the sports arena, as well as their parents, and educating them with financial literacy, resources, and experiences to implement into their lives so that they don't have the challenges that a lot of us had growing up, where we think that making money is going to last forever. But some people think that when you make it, you think it's going to last forever. But Russ, things change, things pivot, and you got to be able to pivot. Economy change, right?
Life get to life.
But unfortunately, a lot of young parents don't understand that yet. A lot of kids don't understand that when we've been through it a couple of times, and you continue to be blessed to share your experiences, you got to preach it. You got to put it out there, let people know. These are some resources for you. This is the way you should move here, move there, and be prepared for the future. So it's been great for the past 11 years now in this arena, helping families, athletes, entrepreneurs, and even regular people who have W-2 jobs, just share information about how the financial market works, how to help people not run out of money at retirement, to protect what they currently have, so that when they have challenges, they can keep their family together, they can keep their peace of mind, and leave legacies as well. So that's a long introduction. That's a little bit background of Vaughn Showell, and maybe when we fast forward to CEO of Blue Cross Financial Services today.
Good stuff. So let's jump right into this, man. So you said a mouthful there, and on social media, I noticed over the last few years, we see a lot of people when, someone passes, or, families facing hard times, or someone's having a major surgery. A lot of people are creating GoFundMes. And, the question always pops up, like, did they have life insurance policies? Like, did they plan financially, for a rainy day, because like we said, life is gone life. It's all about the ebbs and flows. So Speak a little bit about like some of the different things that you offer or that you speak to people about that help protect people in these scenarios, like as
Right.
far as the death of a loved one. Like,
Oh,
how should they prepare?
for sure, Ross. And that's really the essence of what I do. You know, protecting your bank account, protecting your retirement plan. Because what happens is, you know, our economy, unfortunately, has not been fair to us, just in corporate America, period. So a lot of people tend to, you know, live check to check as it is. You know, over 10% of Americans don't have, you know, $500 in the bank account, right? The income gap between whites and blacks, the net worth of white families are 285,000 is the net worth of a white family today versus a black family, it's only $44,000. But black families are expected to do the same work, same energy as their counterparts. We have no different challenges, and those challenges are rooted into our DNA, unfortunately, and it causes us to really work harder, reward ourselves when we do. We should be rewarded, and not put money away for a rainy day. So what I found over the past 11 years, Russell, is that a lot of people have intentions to leave legacies, to leave a financial platform for their family versus a burden. But a lot of people tend to overspend. They're overspending. They're, you know, trying to keep up with the Joneses, or they feel they want to reward themselves for succeeding financially, and their priorities don't align with, you know, supporting their family or leaving a legacy. So hence you have people who don't have life insurance, and hence they got to be buried, number one. But then number two, you know, leaving a legacy for the children, you know, is important as well for those who are brought up that way to take care of their kids or their wife, because life insurance is essentially used to replace the income that is lost from the death of a family member. Okay, so if you have a married couple and you're making $100,000 a year for the husband and 50,000 for the wife, then the husband should have at least, you know, 10 times his income, you know, coverage, which is $1 million, which will help the wife, you know, navigate through the challenges of the death, help, you know, put the kids through college, help them get a head start in life. But unfortunately, not a lot of families, you know, are that strategic and putting their money into an insurance policy when they're young that will help leave that legacy. So hence that what that does is that causes people to react, right, when a family member dies, and they react by doing a GoFundMe account just to bury loved one. But the educational part is people can insure their family for pennies on the dollar at a young age. Get it when you're young. 25 bucks a month, 30 bucks a month is what it could be. You know, 50 bucks a month long term. But what I found, Russell, is that a lot of my clients who are in their 40s and 50s, they finally get it. Oh, I want to leave a legacy. I want to make sure that my children have money for college. I want to make sure my wife is taken care of. But at that point, you're older, and the premiums on insurance are based on your age and your health. So the older you are, the higher the premium is going to be. Versus the younger you are, the lower the premium is going to be for the same amount. And it's just a risk tolerance that the insurance business uses to navigate, you know, who gets, you know, what premium for what amount. So unfortunately, you know, these GoFundMe accounts are reactive, and they have fees to it, and they're a fallback for a lot of families. And what people, you know, fail to realize is that a lot of life insurance policies are not for just when you die. You can use them as you're living. Whereas if you have a heart attack, stroke, cancer, kidney failure, a critical accident, a critical injury, you can take money from the insurance policies that you can use to pay your bills as you go into these treatments. Now, even Alzheimer's is a coverage rider as well. So if you get older, you have Alzheimer's, you're diagnosed with Alzheimer's, you can access the money to go through treatment for your nursing home, what have you. That what that does is that relieves the financial pressure on the family who's taking care of, you know, the person who's ill, who gets sick. But these conversations, I tell you, Russ, over the past 11 years, um, everybody just is like, it's just like has an aha moment. And it's like, okay, I need to do this. I didn't know this. I didn't know that. I just thought this. I just thought that. Well, you know, one of the reasons why my business has been so successful over the years, and I'm so passionate about what I do, because Blue Core Financial stands for blue collar and corporate individuals, Blue Core. and I have a passion for helping people navigate the trenches that a lot of us didn't know about, and being able to provide information to our community that's not really available is a really, really gratifying service that I do. So I tell a lot of people, you're not going to find many Caucasian people coming up on your door talking about, hey, Russell, let me teach you how to protect your retirement plan. Let me teach you about your 401k. Let me, teach you how you can get tax-free income. No, they're not doing that. They came to our parents' home back in the day and knocking on doors and selling insurance, right? But nowadays, the insurance business, the investment world is about them making money. And the big corporations want to make money, and the agents who are work for these companies, they get beat over the head for not hitting certain numbers, just like any other business, right? They want to overwork you and pay you. Well, as an independent agent, there's nobody beating me over my head to do numbers. I do what I do. I speak to who I speak to. I provide what I provide, and I get compensated by the carriers based on the services that I provide. But no one's telling me that I have to do this or I have to do that. So my goal and has been is that when you see the TV or commercials, and they say, if you have $250,000 in your account, give us a call. We'll talk to you. We'll tell you how to do X, Y, and Z. Most people, my community, don't have $250,000 in their bank account or 401k. Most people, like I said, have minimal funds. But what I do is I'm going to talk to anybody and everybody that wants to learn about the financial world, because I'm not really bent on how much money you have in your account. I'm bent on helping protect what you currently have and helping improve and grow what you currently have. Because one day down the line, you're going to need some money, and applying for a loan, applying for a business loan or credit card, that's the long shot. But these GoFundMe accounts or fallback, that it is helpful for some people as a fallback. But trying to prepare for that pivot is what I focus on when it comes to the life insurance part of it.
Good stuff. So let's back up just a little bit, because you touched on something, and it just reminded me. Like I said, we met 25 years ago in Brazil, right? And I remember before I took that trip, I'm like, gosh, this is a long flight. It was like 9 hours or so. Mm-hmm. And I'm like, it's kind of risky if you're starting to look at flying, right? Mm-hmm. Risky, but not risky, right? And I was like, man, and at the time, I think my daughter was about 2 years old, mm-hmm. and it was way before my son. And I was like, gosh, if something happens, I want to make sure they're taken care of. So that's when I went and got a life insurance policy. I went and got $1 million policy. They sent someone out to take my blood, check my heart, all that good stuff. And I was able to get a policy then. And from them, I always had a policy to make sure my loved ones are covered, right? Mm-hmm. So let's take another step back on what you were saying as far as being able to borrow from your policy. Can you explain to the listening audience the difference between, say, like just a regular life insurance policy versus like a whole life policy?
Great question, Russ. Definitely. And to piggyback on the decision that you made when your daughter was 2, most people don't realize that when you have that security, you feel so much better when you know that if something happens to you, your seed is taken care of.
Exactly.
Right? And that feeling is something that you can't put a price tag on, right? The different type of policies that are out there, there's a term policy and there's a permanent policy. Okay, a term policy is equivalent to when you're renting a property or renting a house or renting an apartment. You rent it, and when you're done with it, you leave. So a term policy has an expiration date. It could be anywhere from 10 years to 40 years, meaning that it will expire. So you're renting the policy, but if you die within that period, your beneficiary gets that money. Okay, but if you outlive that policy, you gotta get another policy. Okay, and if you get it in your 20s, it's a 30-year term and expires after 30 years, you're 50. Now you gotta get another policy, and the premium's gonna be even more. So that's a term policy. The permanent policy, we look at it as buying a home where you get equity in it. Okay, so you can use a permanent policy whole life or universal life policy. You can buy it when you're 25 years old. It will take you to the age of 121. Okay, And during that time, as you're putting money into the policy, you're building cash value over that time. You're building equity. And at any time, let's say if you get it when you're 20, when you're 30 years old, you may have $10,000, $15,000, $20,000 sitting in that life insurance policy that you can tap into to buy your first home, help your kid through college, or not. Just let it sit there and use that money for retirement. So those are the two forms of life insurance, with the term and the permanent, that are really the foundation for any financial platform, financial plan. Um, Most, if not all, corporations have insurance policies on the executives of their companies. A lot of my entrepreneurs are very familiar with the strategy called executive bonus arrangements or key employee policies. Insurance rules the world, Russell. And when you see these executives at, say, Chick-fil-A, Coca-Cola getting these $5-6 million annual bonuses, that money doesn't come out of their bank account. That money comes from these insurance policies that the corporation owns, the insurance company pays for. It's a tax write-off, and the tax growth in that permanent policy goes to the company. So they take that money to pay bonuses, Christmas bonuses, performance bonuses, and to retain good employees.
Now that's good information. That's the first time I heard that one.
Mm-hmm.
Very good information. You touched on something earlier about the wealth gap between, Black Americans and, other groups, right?
Mm-hmm.
And I've looked at that a lot over the last few years. And, of course, slavery played a role. But then during Reconstruction, Black people owned millions of acres of land. And then with the influx of a lot of Eastern Europeans and the creation of the Klan, and it pretty much was a war in the South, in the Southeast, and then the Great Migration, because they pushed them off the land and took the land, and they went to poverty. But during that time, we were married. It's like the married age people, about 90% were married, big landowners. We were high moral standard. And also during that time, believe it or not, majority were Republican because we were very conservative, right?
Mm-hmm.
And, controlled a lot of the Senate and House Representative seats in the South. But now you look today, from 1970 to now, we've almost dropped to, say, mid 20% being married. What role has that played on really making that gap even wider, that wealth gap?
Well, that plays a significant role, Russell. You know, you refer back to slavery, when they say, families were tight back then. Unfortunately, I guess post-slavery, when people supposedly make it, they want to look out for themselves versus reaching back and helping out their community as other races and nationalities do. So unfortunately, as a community, when the family has been broken, we in survival mode. And when the wife or the husband is when they're in their survival mode, when they're single and they achieve a certain status, they feel they've done it by themselves. So therefore, they have that burden to continue to prove they can do it on their own, and that affects the relationships when it comes to our community, where you've got, at one point, women, I don't need a man, or a man's like, I don't need a woman, I can do this. So understanding that most millionaires are married. Having two incomes is way better than having one income. Working together as a team is way much better than working as an individual. So hence, the wealth gap is going to continue to get wider as it has over the years, because it's difficult for our community to come together and put aside our egos and our traumas. So you know what, I entrust you with helping me build this dynasty. And that's where the challenge is in our community. And when I speak with couples, Russell, I'll speak with couples. I'll speak with a wife who wants to get her affairs in order and has the kids. And I said, well, what about your husband? Oh, he's on his own. He'll take care. But this is your husband of 10, 15, 20 years, and you are focused on you and the children. So there's a disconnect there in some families, a lot of families, unfortunately. And there are couples who are married, then the couples who are dating or just living together who think opposite. They want to build a family, they want to build that legacy, they want to build that empire. But the struggles that we've had going back generations really affects how people think about their finances today. And a lot of that is trauma that needs to be fleshed out for some people. But there are some families who understand, that their wife or their children are very, very precious to them. And they love them, and they don't want to see them struggle should they pass suddenly and not have that income.
Yeah. And just to make sure we're talking about the same time frame. So after slavery, like say Reconstruction, after like 1865 time period, uh, say the next 10 years, we were, well, really all the way up to like 1910. We accumulated a lot of land, and we were married at a high rate. 1910. This is post-slavery.
Correct.
All the way up to 1970. So this is new. This is like over the last 50 years where these families start falling apart, and that put a big dent in our financial woes right there. So, so we talk about insurance policies. We talk about all these things. I also think rebuilding families. I think marriage should be like a priority, not just to anybody, but all this. I'm gonna be a player. I'm gonna be single, hot girl summer. That is destroying our community, and financially, you're not gonna have any type of progress or whatever with the financial piece lacking the way it is right now. So.
No, you're exactly right, Russ. As you know, what happened in the 60s and 70s, our country was overrun with drugs, and music that was to tear a family apart. And then incarceration was a big part of tearing the family apart. The whole, black man being removed from the household, and now the black family, the mother, get on welfare or getting child support, or being able to get benefits, but she gets more if she's not married versus being married. So, and then, then on top of that, redlining, when it came to real estate and property in various cities, redlining was a thing where even the government wasn't providing loans to black folks. So having the opportunity to even be on that same platform to gain wealth, we were just lost. We weren't even in the ballpark. But over the past 20 years, really, we become more, educated and astute on the finances. I would even say more so in the past 5 to 10 years, to be quite honest, Russell. Because I mean, when I got into the mortgage business in '98, it's all about making money and spending money. The more you make, the more you spend. It was going to last forever. That's the mindset that, and that's late '90s, early 2000s. That's just 30 years from the '70s. So we got a long way to go between then and now to change the mindset and change the makeup of how families value their families and how they can prepare to make sure that when they die, because we're guaranteed to die, that your children have a foundation, a financial foundation to excel. Because as you know, most families in other nationalities, when the kids go to college, they ain't gonna worry about what they're gonna eat. They ain't gonna worry about food, food in their, food or clothes on their back or shoes on their feet, because they've got money to make sure that when they transition to college, they can focus on college and come out with with an education and have have that delayed gratification set up so when they get a job, they're not in spend mode. Whereas in our community, unfortunately, like kids, the thing of I'm gonna get to college, poor, broke, and lonely, and when I get there, I eat ramen noodles and I'm gonna make it. But when I do make it, guess what? I'm gonna ball out. That's the mindset, unfortunately, that we've had versus having that platform to be like,
yeah, and I think what you said, like, yeah, I think you got delayed right there a little bit. Did you finish what you're saying? You were kind of delayed. You froze up and delayed. Okay, so yeah, so you made a comment about the music and its impact. Like, really, right now, I think our music's at an all-time low, right? And once again, I think it's strategic because it's like these people want record deals and they're being told, you have to make this type of music if you want to get on. Like we went through that conscious hip hop era, but there was a lot of revolutionary things happening, right? When Mandela was in prison, people were rapping about freeing Mandela and South Africa's independence, all this good stuff, right? And it had a big impact. So, the powers that were, or like they went to work and said they had to dumb the music down. This is documented, right?
Yeah.
And, yeah. So we have a situation now where we have like these $50,000 millionaires running around. We here in Atlanta, I see it every day. You see it. They're making $50,000 a year, but they put on this facade as if they're worth millions. Everybody has the most expensive clothes, cars, bag, but they're sleeping in their mama's basement or on the couch or whatever they're doing. I'm not sure how they're actually pulling it off, but we know what real numbers are, and that that kind of money does not exist in our community to that extent. Atlanta, there are a lot of wealthy people of color here, but not to the extent that you would think if you're just looking visually.
No, you're exactly right. You're exactly right. A lot of $50,000 millionaires is exactly right. There are people who can do really well on, 50, 60, $70,000. The key is
if they're investing right.
they're investing right, and if they're not overspending, right?
Right.
If you're not in a lot of debt, trying to keep up with the Joneses, you can live modestly. There are a lot of people who make less than six figures who are millionaires, by the time they retire, because they're very frugal with their money, and they don't have this instant gratification or this desire to prove everything all the time when they get a check. But like you say here, in the Atlanta market, everybody like to prove something. Everybody, I hear all the time, you got guys, flexing with their cars, living in apartments, and living with their mama, they can't date properly because all the money's going to car bill, car insurance, within their clothes. They can't even take a woman out properly. You know what I mean?
And you said a mouthful right there. And the thing is, I did the research one day, and I seen that the majority of the millionaires, I think they said, only earn about $35,000 a year. So it's like because they're great investors, right? And I've seen these young kids whose parents taught them how to invest, right? They understood money, had a wealth mindset, and they would go get little jobs making 30 some odd $1,000 a year, but they took the majority of their money, put it in the stock market, and allowed it to grow. And over a period of time, exponentially, you go from having 10,000, 50,000, 100,000, 200,000, 250,000. Then, next thing you know, 10 years later, you have over $1 million in there. And, we know what the stock market and what the real estate market does is constantly on the incline. So it's like you said, it's all about delayed gratification, being patient, but really it's a mindset, right? So I think it was Dennis Kimbrough said it best. He said that poor people keep score with cars and clothes. Middle class people keep score with titles and degrees. The rich keep score with their bank accounts.
And they have the discipline to do that with their bank accounts, and they understand the market. They understand the different platforms, like you're saying, between the real estate market, the stock market, and now you got crypto, we got different stocks, and to include life insurance. And life insurance has been around for 200 years. A lot of people don't realize that. I mean, slaves were insured back in the day.
Oh, big time.
And New York Life and Mass Mutual were the first two companies to insure slaves' property. So
call those names out one more time for the people in the back.
Yeah, New York Life and Mass Mutual. They definitely insured slaves back in the day, and that's how a lot of slave owners got wealthy. Is through insurance, right? It's through insurance. Insurance is insurance is the best investment you can make, and have the highest return on any other investment you can do. Like you can have a policy, for $1 million policy, paying for a year, and then you die. And guess what? You put $1,000 into a policy, you're going to get $1 million.
Yeah, yeah, you're touching on something big there. Can you speak to the audience about like the Rockefellers or Rothschilds? You hear these stories on how they built their wealth around insurance policy, even though like the Rothschilds were bankers, et cetera, but they did it through insurance.
They did. And as we know in our community, um, laws and rules and regulations are made by those who are in charge. And back in the day, the Rothschilds, the Chasers, they created the financial platforms through the Federal Reserve. And we think that banks are our friend, but they're really not. They're set up for for it's a for-profit business, but unfortunately, it wasn't as profitable as they wanted to be. So they created insurance policy, insurance plans. They went to the IRS. The IRS, they put the code, the 401k, 403bs. Those are IRS codes that indicate what tax advantages that you get when you put your money in this particular place. And those, the Rothschilds, the Chases, the Vanderbilts, they're all part of creating this platform that gives them a tax advantage, okay, and grows money tax free. Back in the late 70s, when the permanent life insurance was created for tax free income, it was doing so well that the government said they had to put a cap on it, right? So now whenever you originate or create a permanent life insurance policy, the limitations as to how much you can put into it to have it grow tax free before it becomes a taxable event. So this was created by those that you mentioned. Same as the 401k. The 401k was initiated by corporations for the executives to get tax breaks. It worked so well that then they decided to offer it to employees because they saw how much of a money grab it was. Okay, where we're gonna take your money right now, and we're gonna reward you by us investing it for you, give you a tax break, and pay taxes later as we play with your money. So most corporations, they get a kickback on the 401k plans, right? So you at Chick-fil-A, who the HR, they say, look, some people say 401k is mandatory. It's not mandatory; it's voluntary. But they want you to get into it because they get kickbacks on on the money that was put into there, and they have financial advisors that manage those portfolios. So it's all about the rich getting richer, right? And that is one source that has been very helpful over the years. Average returns is say 8 to 9% on the steady, although the market does, is volatile, it does go up and down. But there are other resources that can complement that to include, stock options, individual IRAs, Roth IRAs, and now you got crypto, and you got life insurance. These are solutions that are part of the financial makeup that everybody is doing. But unfortunately, in our community, we're late to the party when it comes to a lot of these resources, and we're very skeptical rather, when it comes to implementing something that's new, that's different, because we haven't heard about it, right? Because our parents told us, well, those who had parents who was astute when it comes to finances, the 401k. But one of the sleepers is stock options. Stock options, if you have a company that offers stock options, that is a win-win situation that a lot of companies do not offer. But those who do offer it, I highly recommend that they jump on them. A lot of my clients, unfortunately, rely on Social Security income, and their 401ks have been diminished because they've transitioned from one job to another. They've taken the money they invest into their entrepreneurship. They got to start over. So starting over with the 401k, a SEP IRA, some employment IRA, or even the individual 401k or Roth IRA, I see a lot of parent families over the past 4 or 5 years creating these platforms in their 40s and late 40s and 50s. What I found is working with a lot of young athletes and our younger generation, they're yearning for this information, and they're starting younger nowadays when it comes to investing into their future, which is very positive to see.
So, real quick, talk about some of you mentioned a few things like crypto, stocks, things like that. What are some other investment strategies that you go over? Like, is gold, silver, anything like that in any of the packages?
No, so commodities are they've been around forever. Gold and silver, oil. those are not areas that I consult on. But when it comes to what I focus on is protection and accumulation tax free. That's a whole lane by itself. Um, just as there are lanes of investing in certain stocks, investing in gold, investing in crypto, right? Those have so many tentacles going through them that you want to focus on a specific area to be efficient. And what they say, with a master of all trades, but be perfect if none. What they're saying is,
A
um,
jack of all trade,
jack of all
master.
trades, exactly. Um, when it comes to the financial makeup, you have different sectors, and the sector that I have latched onto is the protection sector, because all the other sectors, you get the money, you spend it, it's gone. You get the money, you spend it, it's gone. And every 5 years or so, our market takes a hit. The economy goes like this, up and down every 5 years, going back to Black Sunday back in the 70s, right? And then you got savings and loan scandals in the 80s. So all the way up to the dot-com era, then the housing collapse, then is one thing after another. So what I focus on is being prepared for when your 401k takes a dip. Okay, being prepared for when your crypto takes a dip. And so about a mindset. It's about a mindset of understanding how the markets move, and you don't want to time the market. You want things called dollar cost averaging when it comes to investing and long term strategies. You can have your high risk, your moderate risk, and your low risk, but people must understand the older we get, the less risk we want to take, because when we lose it, we have less time to get it back. The younger you are, you can take high risk, okay, because you have the energy and the wherewithal to work hard to get the money back that you lost. Then you have the moderate risk. The moderate is going to be steady, with not a lot of risk, but not great returns either. But it's steady. So when I speak with my clients, and unfortunately, most of them have no pension. They don't have a 401k, and they rely on Social Security. And as you know, Social Security is being cut by 20% in the next couple of years, right? So do you think 10 years from now they're going to give that 20% back? Probably not, right? With the country being $37 trillion in debt right now, do you think taxes are going to go low? You think the programs are going to be set up to put more money back into our pockets of retirement? I don't think so, right? So what you want to do is take advantage of these solutions and have the discipline. That's the key, to minimize your spending and put money into areas that are going to give you compound interest and give you some guaranteed returns down the road.
Good stuff. Before we wrap up, let's talk a little bit about trust and what's the importance of having a trust, right?
Mm-hmm.
And talk about the differences between revocable and irrevocable trust.
Wow. Well, that's a whole other lane as well. Russell, and wills and trusts are in my lane, my wheelhouse. And it's so important to understand that without a will, without a trust, you're giving away almost up to 50% of your estate in taxes and fees go to the attorneys and the cities that manage your estate if it's not organized properly. So a living will can relieve so much stress in a family, right? Which identifies not only who gets what, but a will identify how you want to be buried, what you want to be, if you want to be buried, if you want to be cremated, who gets your watch, who gets your rings, what color suit you want to wear. Things that will take stresses away from the family trying to decide for you when you're not here. That's what a will does. The trust is going to allow you to have your estate distributed, reducing the fees and the taxes on your estate. And the reason why you want the trust, obviously, is that instead of having an attorney and a judge determine who gets what, they got to get paid, right? They got to get paid for their time, because that's how attorneys get. They get paid with $3-4 an hour to do this type of work. But if you have a trust already set up, that takes away their work, which minimize their fees, which minimize the taxes, which puts more money back into your kid's pocket or your wife's pocket in your estate. So the different types of trust have are the revocable and irrevocable trust. That's another topic that we can talk on for days. But when you start a trust, you can either have it where it's irrevocable, where it means that irrevocable means you can't make any changes to it even while you're living, or revocable while you're living. So depending on how what you want to add to your trust or take away from your trust, will dictate what type of trust you get set up. But most people think that, well, I don't have anything. I don't need a will or a trust. Well, if even if you have an apartment, you need a will and a trust, right? The thing is, a trust that can be pretty pricey depending on how large the estate is. Anywhere from $300 to $500 on up. It's going to cost. A trust can cost roughly 10 to 20% of your estate is how they're priced for a trust, right? But there are options where you can nowadays where you can spend a little bit less on the trust and still be effective. But those who put will and trust together, those who facilitate them, they get paid hourly, and they can be pretty pricey if you do it on the back end versus on the front end.
Good stuff. Vaughn, tell the people out there, how can they get in touch with you to either learn more or to get your services?
Well, I have the good old faithful website, which is bluecardfinancialservices.net. I'm on Instagram, Blue Card Financial Services. Also, good old faithful business number. That's the 470-357-8119. I take calls 7 days a week, before 9, between 8 and 9 p.m. Social media has been a big platform for me, or Facebook as well. Vaughn Showell on Facebook as well as Blue Core Financial. And social media, again, has been a huge plus in the past few years to reach the network of people. I know back in the day, I spent a lot of money in the mortgage business advertising, reaching out on radio and newspaper, on TV. Now it's almost zero compared to what we did back in the day, to get your business out there. So all social media platforms I'm on, as well as my website, bluecardfinancialservices.net. And you can hit me up with any questions, consultations that's needed.
Good stuff. And also here on Matters of Heart and Soul, Vaughn, we always like to see if you have a book or books that you would recommend to the audience. Doesn't have to be specifically on finance, could be on anything, but is there any books or book that you could refer to the people?
There are 2 books, and one book I'm James Clear. Look at me right now. I keep it up. Atomic Habits. That's one book, and also The Psychology of Money. The Psychology of Money is a book that is very, very helpful. It helps people understand the value of themselves and the value of how delay gratification is important, and it's really an insight into helping you respect money. So those are 2 books that I suggest. The Psychology of Money really reminds me of the book Napoleon Hill, Think and Grow Rich, that I read 20 years ago, and to this day it sticks with me. The Psychology of Money has a lot of great information on it, and it really makes you think about how you move when it comes to your money and doing for others. So those are 2 books that I highly recommend: Atomic Habits, Time Changes, Remarkable Results, title on that, and then The Psychology of Money as well.
Good stuff, man.
Yeah.
Actually, I'm gonna have to look into those. I have not read it either.
Mm-hmm.
Is there anything else you want to share with the listening audience before we go?
Well, I want to thank you, Russell, and your beautiful wife for having this platform and sharing this information. This information on a daily is what I live, eat, and breathe, and I love having these conversations on a regular. What I do here at Blue Card Financial Services, I don't consider it work, Russell. I consider it a service, and I really love having these conversations. I tell you, everybody I talk to just loves the conversation because there's so much information out here that people are busy working every day, taking care of their job, taking care of their kids, their dog, and finances are not really a priority in our community, but really it should be. It doesn't take a lot of thought. It just takes time to sit down at the kitchen table with your family and say, look, this is where we are, if something happens to me, I want to be prepared because I love you, wife. I love you, husband. I love you, kids. And this is what we're going to do to prepare in case something happens. Because tomorrow's not guaranteed to us, if you know, Russell. And having our financial backing to help our families through the financial challenges, it minimizes the stress, doesn't take it away, but it does allow families to get back on their feet financially so that they can continue to accomplish their dreams and their goals. But I thank you for having me on here, brother, and I look forward to doing more stuff in the future.
Yeah, definitely. We definitely have to do it again because, one of the things you said, like nobody's going to live forever. If you know that it's inevitable, we do not get out of this physical realm with this spacesuit. And it's like you're going to leave loved ones behind. So why not leave a legacy and leave them something to have a better life other than bills and heartache? So once again, everybody, this is my good friend, Mr. Vaughn Showell, CEO of Blue Corp Financial. And until next time, peace.